Hello, this is Manish Patel from the II Capital Group. Today we're going to be doing an Ichimoku analysis of the U.S. markets. We're going to do this every Sunday. We're first going to start with the U.S. equity markets and eventually start doing a video on Sunday night too, also on the currency market, or maybe even Saturday, since currency markets start opening up on Sunday. Um, Before we begin, normal disclaimer, these videos are for educational purpose only. Um, Also, all charts are either in Thinkorswim or TradeStation. Here are my contact details. If anyone has any questions, you can email me, or you can go to eiicapital.com to learn more about Ichimoku. Okay, so we're going to go straight into the U.S. markets. First thing, we're going to look at the E-mini S&P futures. The reason why we're looking at this compared to S&P, SPX, NASDAQ, and so forth, the futures pretty much are a 24-hour type of scenario. A lot of people look at this as the kind of gauge to where the market's at. Um, if you look at the ES right now, this is a daily chart of the ES. You can see that basically it is below the cloud. All the Ichimoku sediments are basically bearish. Also, you could see that basically not Friday but Thursday we did go back and kind of actually went below this day, which is basically a lot of people still don't know what's going on and why it happened. But we did go below that point, so this was not a fluke day at all. It was really real. And you could see that because we actually went down there, went below it, and actually came back and closed higher. Now, this could signify a double bottom. However, we don't know any of that right now. Right now, all the Ichimoku signs are basically still very bearish. So you gotta sit there and look to play bearish, but you gotta do it with very little risk right now. Okay, so if you're intraday trading, bearish is still kind of the key way to go, but it's caution is the word. Also, a reason why is that Tinkinson did not follow price at all. So there is a possibility of price coming back and meeting Tinkinson, or Tinkinson me coming to meet price. But the Chicago is very out in open space, so there is a lot of bearish momentum right now. Let's quickly look at the weekly charts. Here's the weekly charts. You can see from the weekly charts instantly sentiment is bullish. Reason why it's above the cloud. However, you got a lot of conflict going on. Your momentum for bullish scenario is not there at all. And also the Tinkinson Cajenson relationship. If you look at there, it's bullish. However, price is below this scenario. So there is a high chance that we're probably going to get a pullback on the daily time frame. After that pullback, what's going to happen? We don't know. Or if this bearish momentum is very strong, you still pretty much can lead off going down. Really don't know what's going to happen to that at all. But remember, Friday was expiration week, expiration day, so there was a lot of option contracts that were expiring too. So quickly, I want to show you guys something. If you hear, this is in TradeStation. What I've done is I've added the Indu, the SPX, and the NASDAQ in here. This is a percentage-based chart, so it kind of shows you from the beginning of the year, which we kind of zeroed out to be 0%. You can kind of see that the markets went all the way up to about 11.5%, and then basically have retraced now to a point we are negative for the entire year. Let's zoom in some more. Please zoom in. Just gonna zoom in out here, and you could see that basically right now the NASDAQ is down 1.76%. This is 521. You could see basically NASDAQ is, if you look at the lows or kind of the closing prices, you can see the Indu is basically negative 2.25% down for the year. The SPX is negative 2.45% down for the year, and the NASDAQ is about 1.76%. So NASDAQ, if you look at them, is still didn't take that big of a hit if you look at this, but however it did. Reason why is if you look here, NASDAQ took off and went at a higher percentage move than both the SPX and the NYSE. So when it went down, it did actually move the same percentage down, but overall for the beginning of the year we are still higher. So technology is still leading the SPX and the NYSE. However, we don't know what's going to happen tomorrow. So just keep a lookout and just notice that we are negative for the year, and just be very cautious in how you play everything. Okay. Lastly, we're just going to sit there and quickly go through and just show you the SPX chart. Okay, here it is. As you can see, the SPX is very similar to the futures chart. However, we didn't go back and retest the low at all here. But you know, it's very similar, so we don't know what's going to happen. The good gauge is always to use the S&P mini futures compared to the SPX or the NYSE and so forth. Let me pop this back up. Sorry. Again, slideshow. There's my contact details. If anyone has any questions, feel free to contact us through eiicapital.com, and the resources are available for everyone. Thank you.